From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming May 30th Forex session. In front of you is the Euro Swiss pair, and it's interesting that I'm actually doing this. I have to admit, this is probably the first time I've done any significant analysis or reporting on this pair in a year at least, if not two. Now, for those of you who haven't been trading Forex very long, you probably don't realize that this is, at one point in time, was considered to be basically a major cross, if not definitely a second tier cross. I mean, you have the euro and you have the Swissy. They're both major currencies and a reasonable trading spread. Normally, with most brokers, you're looking at about 3 pips or so. So it wasn't exactly a difficult spread to get over. And I used to trade it quite a bit. What happened was the Swiss National Bank had put a peg, and I'll go ahead and zoom out for this, at the 120 level. They said in an extraordinary monetary announcement that they found 120 to be the minimum acceptable trading rate or trading exchange rate with the euro. In other words, they would buy unlimited euros to keep this market above 120. That's what happened here during this candle, and you can see for the longest time, essentially a year and a half, 2 years, we basically went nowhere. Well, now we're testing the outer range or outer part of the range, the upper part, and this is the 125 area is an area of significant resistance, as you can see on the weekly chart. I'll go ahead and zoom back into the daily chart. Let me make the candles a little bigger for you. And now you can see we are slicing around now. The question then becomes what happens next? Well, I think for the short-term trader, this might be a decent market to work with. I can make a pretty strong argument for significant support at 124. You can see it there. It has been for a couple weeks now, as well as significant resistance at, say, 125.50. Now, obviously, we will break out of this range sooner or later, and when we do, it'll be interesting to see what happens. But right now, I firmly believe that the short term charts more than likely will offer trading opportunities, perhaps even as low as the 15-minute charts. You can see that we are starting to turn back around. And again, when you look at this chart from a short term range like this, you can see that there is plenty of room to get up to about 125.50, and the 124 level is actually below here, but it gives you an idea of how much room there is to trade. Short-term traders should love this market going forward. I fully believe that there is plenty of support down here, and obviously, as soon as if we were to fall apart for whatever reason and come anywhere near 120, that is probably the easiest buy in the forex markets. Whether we break out or not might be a different story. Looking at the weekly chart, we have a wicked shooting star here from the week before, so perhaps we get a little bit of a pullback. That would be represented by a move below 124. But again, this is a nice range to play. Right now, it looks like we're trying to decide whether or not we can break out. And in the meantime, there are short term trades to be had in this chart. And something I'll be watching maybe 20, 30 pips at a time to pick up.